Welcome back to my channel, and as usual this is Douglas with Teach Me Wall Street. In underscore on 2 today, we will be looking at Forex basics including raw sizes, pips, and how to calculate profit, major and minor currencies as well. You can use the timestamp to select the topic of your choice. Please like and subscribe to my channel.
Okay, now you don't have to start with 100,000 obviously. Like I said, you can start with $1,000, you can start with $200, but understand that you are then getting 5 to 20% returns off that $1,000 or off that $200. Okay, I know some of you are thinking, hey Adam, I've seen videos of I've watched ads where people say, I'm making 100% a month, 500% a month in Forex. Why are you making 5% or 20%, right? That's not exciting. Sure, are there people who make 100%, 200% a month in Forex? Yes, they are. They are, and I can tell you this. They don't do that every month. Okay, and I can tell you most of the people who are making 100%, 200% a month are taking extremely high risk. And what they don't tell you is that a month later or the next month they lose everything. Okay, so if you want to make, get a big bang, sure, go do that. Go risk a lot, and you can make a lot, in a short period of time. But more often than not, it is not sustainable. Like I said, making money in the financial markets is very easy. An idiot can do it. It's called luck. Just being there at the right place at the right time. Remember, the market can either go up or go down. So you've got a 50-50 chance of being right when you place a bet. Okay? But it is being able to keep that money and do it consistently like a regular income source. That's difficult. And if you want to do that, you cannot risk a large amount of your capital. Because all you need is one time you're wrong, and you will be wrong. This is a 50-50 chance, 50-50 chance in the short term. You're going to wipe everything out. And that's why most people who don't understand this, most people who go into trading with this grandiose thing that I'm going to become a millionaire overnight, 99.9% they will lose everything. Alright, so I can tell that most people who do not take a proper course and they go in there and they try this out, they'll tend to blow their account. Blow their account means they're going to lose everything at least 3 to 4 times before they wake up and say, okay, fine, now I'm going to do it properly. And doing it properly means not wanting to get 100%, 200% return a month, because that's not sustainable. Okay, it's getting 5%, 20% a month. That's sustainable. Alright, and that it's better to do that consistently month after month after month than 100%, 200% one month and do everything the next month. Make sense? I hope you agree. Alright, and that's really important. Okay, good. Let's move on. Forex basics. Okay, if you know nothing about Forex, understand that Forex is quoted always in currency pairs. Okay, so it's unlike the stock market. In the stock market, you ask, what's the price of Facebook? Facebook's $160. That's it. That's one stock. But in currency, you can't ask what is the price of the US dollar. The price of the US dollar versus what? Versus the euro, versus the yen. So currency is always quoted in pairs, right? One currency being exchanged for another currency, okay? And each currency is given a 3-letter code. So this is something that you have to memorize, okay? EUR is the euro, USD is the US dollar, GBP is the Great British Pound, JPY Japanese yen, CHF is the Swiss franc, AUD the Australian dollar, CAD Canadian dollar, and NZD the New Zealand dollar. So these are the 8 most common currency symbols that we will be trading. We will be trading Zimbabwe dollars or Singapore dollars. No, that's too exotic. Alright, main currency pairs. So again, these are other currency symbols that we will be trading. Right? At least I don't trade them. And again, the most successful traders only trade the most common and liquid 7 pairs. Now, I do trade beyond the 7 pairs, slightly beyond it. I'm going to show it to you, but these are the 7 most common pairs, which are the most liquid. They're the most actively traded. Okay, highest volume. So it moves with the greatest volatility and the tightest spreads. And I'll talk about spreads in a while. So what are the 7 most common pairs? You've got the Euro USD, or you've got the Euro dollar. We've got the pound dollar. We've got the dollar yen, which is US dollar versus Japanese yen. Dollar franc. We've got the Aussie dollar, New Zealand dollar, and the dollar CAD. Okay, so these are the 7 most common pairs. currencies are quoted in pairs and mostly in 4 decimal places. So what you see here is Euro, USD, 1.3505.2. Now, we only pay attention to the 4 decimal places. Okay, the 5th decimal place is known as a fractional pip, and we do not care about that. Okay, so it's too small to worry about. We're looking at 4 decimal places, right? So the last decimal place represents a pip, and I'll talk about that in a short while. Okay, so when you see a currency pair, the first one is known as the base currency. So Euro is the base currency. USD is known as the quote currency. Alright. And like I said, the 4th decimal place is known as the pip. And the pip is the smallest change in the currency pair that we are concerned about. Okay. So in this case, it is 3505. Now usually when we read it, we don't go 1.3505. We just say 3505. Okay. Now, if it goes from 3505 to 3506, what does it mean? It means that the euro has, or rather the euro USD has gone up by 1 pip, right? It's from 5 to 6, it's 1 pip. Does that make sense? Okay. Now, if it goes 3505 to 3516, what has happened? The euro USD has gone up by 11 pips. Does that make sense? 11 pips. You see 11 plus 5 is 16. Okay. So pip is the last decimal place. So if you look at this entire thing, it's 3,505 pips since it moved up from 0. Okay, just a damn long time ago. Like I mentioned, it's a fractional pip, so we're not gonna worry about that. We're gonna look at the pip. Okay. So like I said, the base currency always has a value of 1. Okay, so in this case, euro, we're saying 1 euro. So in this case, what we're saying is that 1 euro is equivalent to 1.3505 US dollars at this particular point in time. So in other words, if you want to buy 1 euro, you have to pay $1.3505 US dollars to buy 1 euro. And if you want to sell 1 euro, you would receive 1.3505 US dollars. So that's how you read currency quote. Okay. Now, understand that all currency pairs, except the ones with Japanese yen in them, are always quoted to 4 decimal places. Okay. So 1 pip is 0.0001. Okay. So that's 1 pip, which I mentioned earlier on. But anytime you've got a Japanese yen in the pair, like you've got dollar yen, you've got pound yen, or anything with a yen, okay, the pairs are always quoted to 2 decimal places. So whenever you have a yen, 1 pip is a 2nd decimal place. 2nd decimal place for any of the yen pairs. So the best example is the US yen or the dollar yen. So in this case, the dollar yen is 98.73 or 98.73. So again, what is this called? Right, the first currency in the quote is the base currency. Right, what is the base currency right now? It's the base currency. And what is this called, ladies and gentlemen? It's called the quote currency. That's right. So remember that the base currency, which is the first one, is always 1. Okay, it's always 1. So what we're saying now is that 1 US dollar is equivalent to 98.73 Japanese yen. Okay, and again, this 3, the 2nd decimal place, is a pip. So if it goes from 9873 to 9874, right, the dollar yen has gone up by 1 pip. Make sense? Right, if it goes from 9873 to 9884, it's gone up by 11 pips. Okay. If it goes from 98.73 to 98.72, it's gone down by 1 pip. Alright, so you got that. Okay. So in other words, again, right, $1 is equivalent to 98.73 Japanese yen. So again, what's a pip? A pip is known as a price interest point. It's the smallest change in value for any given forex quote that we're interested in. Of course, the smallest one is the fractional pip, but we don't care about that. So it's the smallest one we care about. Okay, so once again, for all non-yen forex pairs, 1 pip represents the 4th decimal place of the quote. Okay, so again, when the Euro USD moves from 3505 to 3506, it's a movement of 1 pip or 0.0001. Okay, for yen forex pairs, 1 pip represents the 2nd decimal place of the quote. When the dollar yen moves from 80.55 to 80.87, it's a movement of 32 pips. Right, just read through what I just said. Right, so I hope you understand. You're clear at this point in time. Alright, so the next thing to understand is contract lot sizes. So in the forex markets, when you buy or you sell, you're buying units of currency, right, in lots. So one standard lot that you buy is always 100,000 of the base currency. So if you buy one lot of Euro USD, you're actually buying 100,000 euros. If you buy one lot of dollar franc, you're buying 100,000 US dollars. Okay, so it goes by lots. And again, 1 pip is the 4th decimal place for non-yen pairs, and for yen pairs like dollar yen, pound yen, is 2nd decimal place. So just remember, one standard lot is 100,000 of the base currency. Now, you don't have to buy one lot, you can buy less than one lot. Okay? So, like I said, a standard lot is 100,000 of the base currency. And you don't have to buy one lot. You can buy a mini lot, 10,000, micro lot, 1,000, a nano lot, 100. Okay? Now, you don't have to remember the names of these. It's not important. What's important is to know how many units you have to buy and how you key in the lot size. Now, it depends on the broker you use. For example, if you use most MP4 platforms, you key in terms of lot size. For example, if you want to buy 100,000 euros, okay, for USD, then you key in 1. Because 1 means one lot means 100,000. Okay. If you want to buy 50,000, what do you key in? You key in 0.5. Okay. 0.5 because 1 lot is 100,000, so 0.5 is 50,000. Just write it down. So 1 lot is 100,000. 1, 2, 3, and 0.5 is 50,000. 1, 2, 3. Okay, so let me repeat. If you're trading with most brokers that use an MP4 platform, then you key in 1 for 100,000, 0.5 for 50,000. If you're going to buy 500,000, then you key in 5. Does this make sense? Okay. But there are certain brokers, for example, if you trade with interactive brokers, when you key in, you don't key in by lot size, you key in by the currency. So in other words, for interactive brokers, you key in 100,000. Right? You key in 100,000, not 1. Because if you key in 1, you just buy $1 US. Okay. So you have to key in 100,000. So you have to know the broker you're using. You key in lot size on the left, or you key in the number of units. Right? That's really important. But like I said, for most MP4 brokers that you're using, you key in by lot size. Right? Next, how do you calculate forex profits? So the profit you make or the loss you make is equal to the number of pips that you capture. Okay, it moved by 20 pips. It moved by 100 pips. So how many pips did you capture? Multiplied by the number of lots, multiplied by the dollar value per pip per standard lot. Okay, so you understand the number of pips, right? 20 pips, 100 pips, right? You understand the number of lots, right? So one lot, 100,000, 2 lots, 200,000. Okay, you understand that. Now, what is the meaning of the dollar value per pip? In other words, how much is 1 pip worth per standard lot? Okay, and the answer is this: the dollar value per pip for each standard lot most of the actively traded pairs like USD, Pound USD, and Aussie USD. Okay? But to get the exact value, you can go to this website over here, which is mtpredictor.com/pip value table to find out the exact dollar value per pip per lot for most of the major currency pairs. So if you go to the website, you will see something like that. Okay, and again, this changes all the time, so you have to get the latest update on that day. Okay, so on this day when I log in, it's the 7th of October. So as of the 7th of October, you can see that for Euro USD, the value of 1 pip is, now this table is based on a mini lot of 10,000. So we want to look at a standard lot, which is 100,000, right? Which I talked about. So in other words, you have to take this multiplied by 10 to get a standard lot. Okay, so 1 times 10 is $10, right? So all this would be $10. Okay, this would be $8.90, right? And this would be this would be $10.20, right? Just multiply by 10. You understand? Euro franc, this would be $10.20. This would be $8.90. So you can see that for most of the currency pairs, it is straight up $10, right? So in other words, every 1 pip movement is $10 per lot that you buy. That's what it means, right?
Thank you for watching lesson 2. Tomorrow we are going to look at lesson 3. I hope to see you then. Like and subscribe.